how many of you here have heard of the word Bitcoin before? Okay, about half of you, right? And what about the word blockchain? How many of you have you heard blockchain? Okay, a bit less. And how many of you here know the difference between Bitcoin and blockchain? 2, 3. Okay, so I was told that this talk is going to be very basic, right? I'm not going into the technical details. And I've seen some familiar faces here. I've done my talk quite a few times already, and please apologize. It's going to be very similar. But then you can ask the technical questions after. And by the way, for the Q&A session, can you do it right after my talk? Because I have to leave early. Because Mr. Don Tapscott is here in Bangkok, right? He's one of the leading blockchain enthusiasts, and he's speaking tomorrow. So you guys should attend. He is the author of the blockchain revolution, right? So I have to facilitate the event tomorrow. Anyways, so today for my talk, we're going to look at the Bitcoin from the other dimension, not from the normal dimension of the normal users that they read on the headlines, because press usually tell its stories. They pick up stories that they can sell the most papers on, right? We want a true representation of the real usage of the technology, the real potential, right? We're looking at the Bitcoin from the perspectives of the Silicon Valley entrepreneurs here, right? Of the leading VCs from the Silicon Valley today, right? And these guys usually push the production frontier to the next level, and right now they're doing this with the blockchain. And if you're interested in FinTech, about more than half of the FinTech would be run by the blockchain. The reason is because it is the second wave of the internet, right? The first wave of the internet allows us to transfer information instantly, right? And the second wave of the internet, which is the blockchain, allows us to transfer any kind of value instantly for the first time. And this is very disruptive. And FinTech is all about transferring value, right? So more than half of the FinTech would be run on the blockchain. So this technology is very important if you want to be in FinTech. So, do you know when the first cars came out? What do people say? When people were riding horses and the first car came out?
They want faster horses.
Yeah, people were mocking cars, right? They were mocking cars, random machines that is very loud, using some random thing called gasoline that is very expensive and very hard to find, right? And most importantly, it's a machine it's a technology that kills people. And this, the story was so bad that in 1896, the UK government came out with a new law called the Red Flag Act, right? And this law, right, pretty much forced anyone who wants to use a car to have at least 3 people, right? The first one is the driver who drives the car. The second one is the engineers who supervise the operations, right? And the third guy is a guy with a red flag running 100 yards in front of the car and tell the people that the death machine is coming. Do not come anywhere near them, right? So guess what happens to the UK? To the automobile, they ended up losing the automobile industrial race, right? Because for the government, instead of seeing the potential of the technology, they allowed fear to define their reaction. They created an environment where a car cannot do its job, right? If you force a car to run slower than the guy with the red flag, you might as well go back and use horses, right? Electricity. When the electricity first came out, do you think people or the press would go and say, oh wow, this technology is going to change our society? No. They said this is a dangerous technology. It kills people. It burns down people's home, right? So this happens again and again in technology. And when the Bitcoin came out, guess what people said about Bitcoin? You guys heard stories, right? mongols, and all these, right? Criminals. It's a technology for weirdos, very complex, you know. Do not use it, it's only for, you know, black market, etc., etc. But as with any new technologies, any new disruptive technologies, it was adopted by criminals first, right? The first car was used as a getaway vehicle from the police, right? But by the way, Bitcoin has gone past that stage already, right? It's about to hit the critical mass. So, in 2014, Bitcoin received more than $250 million. Right? That's more than the internet was receiving in 1993. Bitcoin is growing faster than what Twitter did in the first 3 years. And the reason for this is because it's an open source. Right? Think of it this way. The best analogy to explain this is in the telco industry. Back before when we had the internet, we were forced to use only the telephone companies to ring friends overseas, right? And these telcos companies invested a lot in infrastructure building. And when you make one phone call, you have to go through a lot of intermediaries, middlemen, which is very cost effective and slow. And when the internet came out, the purpose of the internet is allowing us to have an instant information transfer, right? Sharing information instantly. That's why Skype was able to use TCP/IP protocol to connect people directly, instantly, zero cost. And it's an open platform. You can build Skype, or you can build Line, WhatsApp, WeChat, you know, new communication tools. The result is there is no intermediaries anymore in the telco industry, or in the information sharing industry. That's what the internet does. And the blockchain is about to do the same thing in the value transfer industry. All the intermediaries, brokers, banks, they're going to be like telcos, right? Because right now they're acting as the intermediaries, and they're eating up part of this pie, right? But then with the blockchain, it's just like the TCP/IP protocol. It allows us to transfer value for free. This is very disruptive. So, let me explain quickly what's the difference between Bitcoin and blockchain, right? Bitcoin blockchain is one thing. Bitcoin blockchain is the infrastructure. Bitcoin is the token of the blockchain, right? One application. That's one blockchain. There's an alternative blockchain also called Ethereum, where it allows you to transfer value, or smart contract, right? You can add smart contract. This is going to disrupt every industry beyond finance. We call it value registry. In other words, right, you can have an insurance industry. It's a predetermined contract. Once the event takes place, right, it automatically executes based on the predetermined condition, and then automatically swap the transaction and settle the transaction. Do we need a middleman anymore in this industry? No, right? Inefficient, right? That's just one thing. So Bitcoin is the cryptocurrency, which is the token of the blockchain. But there are other blockchains also, which, you know, some of them has a token, some doesn't have a token. And there are three different types of blockchain. First one is the public blockchain, which is Bitcoin, right? Where everyone can participate to be the validator or the node or the miners, right? The one that keep the book consistent with other ledger keeper. And you need Bitcoin to incentivize this system for other people, because you cannot trust other people. But then there is another type of blockchain called the private blockchain, which is run by a trusted selected node. So you don't really need to have a token to incentivize that, because you trusted every single validator in the system. But then there's another type called the consortium blockchain, where it's a combination. It is a combination of the public and the private blockchain, which is perfect to disrupt the capital market. Right? You can build private market in 2 days or 3 months with this technology. In other words, you can build a private market that is, you select your own validator or the miners, right, privately, and then you open part of it to the public to trade stocks, settlements, right? That's the consortium blockchain. So if we're going to look at the first one first, the cryptocurrency part, there are actually 4 different types, right? Four development phases: cryptocurrency, value registry, value ecosystem, and then the value web. But the first one, for this talk, it's going to be very, very basic. I'm going to talk about the cryptocurrency first, right? So, which is Bitcoin, which is the most popular one. So why is Bitcoin so disruptive? Let me tell you based on my personal experience. About 3 or 4 years ago, before I founded Coins, I had to send some money to my sister in England. So I decided to, instead of using banks, might as well try out the new technology called the Bitcoin. And guess how long it took before my sister received the cash? 30 minutes. That's three confirmation, right? 30 minutes. But it's not just that, right? On that transaction, I also made an extra 5% profit. I was like, wow, this is the first time in history that I'm doing international transaction and I ended up with more money, right? I was like, wow. On that day, if I decided to go to banks, I would lose out 5% because I have to pay for 2 things: the transaction fees and the exchange rate, the hidden fee, right? Because they are intermediaries. Just like I was going to go and use the telephone company to ring my friends instead of using Skype, right? It's even worse if I decided to go to Western Union for that transaction. I would lose around 10% of my cash, and God knows how long my sister would receive the money, right? Weeks. So do you know that feeling when you're first exposed to cars? You're not going to go back and ride horses again, right? That feeling when you're exposed to emails, you're not going to go back and write letters to friends, right? That feeling when you're able to use Skype for the first time, would you go back and pay for international calls? No. That exact feeling, I was like, wow, this is going to change the financial industry forever. I'm not going to go back and use banks again to pay for inefficiencies, right? 5%. So Bitcoin is very disruptive. Remittance. Cryptocurrency has a massive impact on remittance market, right? Every day, an immigrant worker somewhere, right, stands in the lines, waiting to cash out 50% of his paychecks and send this 50% of his paychecks back home to feed an extended family, right? $515 billion are being transferred every year from the first world to 5 major destinations: China, India, Philippines, Mexico, and Indonesia, right? And in some of these economies, remittance accounts for 30%, which is a big value. And sitting on top of that, there is one company called Western Union, taking a cut of 10 to 15% on every single one of those transactions out of the pockets of the poorest people in the world, right? Imagine if one day that immigrant could figure out that he could do the same thing that I did to my sister, but not for 15%, not for 10%, not for 5%, but for 5 cents. What do you think is going to happen? Because he can do that right now. All he needs is a mobile phone that is connected to the internet to use the blockchain Bitcoin technology. For these guys, receiving $100 a month instead of $80 a month makes a big difference. I don't know what else has a greater impact to the world's poorest people right now, apart from this technology. Right? Another use case of the cryptocurrency is the micropayments. Right now, is it possible for us to transfer 10 baht, 20 baht to Africa? No. because the fees that the banks are charging are already much higher, right? Guess what, guys? With the Bitcoin technology, you allowed micropayment is feasible for the first time in the history of humanity. Right now with my company, you can transfer 10 baht to Africa in a matter of one single text message. You don't have to go to the bank, stand in the line, fill out all the form, and tell the receiver that, oh, by the way, you will lose 10% of your cash. Oh, by the way, you would have to wait a few weeks before you get your cash. No. With this technology, you can stay at home, sitting in your couch, with a phone that is connected to the internet. Sending money to Africa is going to be as easy as logging into your Facebook account. It's already happening, and that's what I call revolutionary. Okay. Unbanked. Right now, there are about 2.5 billion people in the world who are currently unbanked. Right? About 175 countries don't really have a proper international banking services. Right now, we are the lucky 1% who have everything, like bank accounts, credit cards. But for most people, they don't have access to those. How many of you here have heard of a company called M-Pesa? Okay. What about Apple Pay? Okay. Apple Pay is cool, but M-Pesa is way, way cooler. This company is, people in Kenya don't have access to proper international banking, financial services. This M-Pesa company turns a simple text messaging phone into a banking facility for the poor. Right? And this technology was deployed at the fastest rate in the human history. This one company alone accounts for 30% of Kenya's GDP right now. Just one company. Guess what, guys? M-Pesa embraced Bitcoin already. So what do you think is going to happen when 2.5 extra billion people in the world can now join the global payment system? This technology opens up an unprecedented new pool of labor force. Right? People in Kenya, people in Thailand, who don't have a bank account, can, for the first time in history, do contract work for companies in the West, for companies in the US, and they can get paid only with their mobile phone. Right? When 2.5 extra billion people in the world can enter the global workforce, think of the impact on the production frontier. There'll be loads more goods and services available. Right? The world will be a much better place. So this technology is not about, it's about this 6.5 billion people who are currently cut off from international banking. But even the 1% like us can also benefit from this technology. Right now, credit card companies are charging us 2 to 3% when we sell stuff online. Right? Imagine if you open an e-commerce company and you're selling stuff online, you're making around 6% profit. You're already giving away 3% of half of your profit to credit card companies just to move bits around the internet. The money is actually not moving anywhere. Right? They're just intermediaries, just like in the telco industry. That money, giving away 3% to banks to move bits around the internet is like the worst possible choice. That money could be reinvested in your company. Not only just that, when you sell stuff online, apart from paying 3%, you also have to face the risk of credit card fraud and the chargeback risk. Right? And another major issue for merchants is that they cannot accept international payments. So if you're wondering why some of your favorite products are not available in your country, the answer is often payments. Guess what, guys? With this technology, it solves all these problems. First, do we need to pay 3%? No, right? Because there's no one single entity eating up this system. Right? Second, There's no credit card fraud because you're not giving away your information when you transact. And third, there's no chargeback risk because payment in bitcoins are not reversible. And lastly, there won't be any issues accepting international payments because we are already in the same global payment network. That's why big companies, right? By next year, actually 2017, $117 billion are on mobile payments. That's about 3% of global transactions. 3% of global transactions, that is a big value if you can save that debit loss in the system. That's why big companies like Wikipedia, Expedia, Dell, Overstock, Microsoft are already embraced Bitcoin. You can buy Tesla with Bitcoin right now, right? Mark Anderson, one of the smartest Silicon Valley investors, invested, just under, $50 million on this ecosystem. He invested in, Facebook, Instagram, etc., right? He invested in Bitcoin. Jerry Yang, the founder of Yahoo, Richard Branson, the Virgin Media guy, they invested a lot also in this technology. They're the ones pushing the world's technology frontier forward, and now they're doing exactly that with the blockchain technology. So to sum up, guys, this is only one small section of the blockchain technology, right? Cryptocurrency. But there are also value registry, value ecosystem, and also value web. Right? The first wave of the internet is gone already. And we have, what do we have right now? Uber, Facebook, everything, right? All the traditional businesses are being disrupted. But then half of the traditional businesses are still offline because we cannot transfer anything of value. The first half of the traditional businesses are already being uploaded online because you can transfer information instantly with the first wave of the internet, right? So Bitcoin is only the first product. The core technology is the blockchain. It allows us to transfer anything of value for the first time in history. That means the second half of the economy would be online completely. Or the second half of the economy, all the intermediaries that helps us transfer value right now can be uploaded online for the first time. So we would have a complete digital economy very soon, with a combination of sharing information and transferring of value online, possible for the first time. Everything would be digital completely, right, with this technology. So Bitcoin has been around for 7 or 8 years, and that's only the first one, cryptocurrency. And developers around the world are moving beyond finance. Right? We have web registry, value registry right now, where it's a blockchain is coming in to disrupt other industry, whether it's a stock exchange, capital market, right? Insurance, anything that is of value. Even personal identity, KYC, AML can be uploaded online. So now, even for example, now we have a bit message. It's very similar to Hotmail or Yahoo, except nobody can read your email except the person you send it to. Right? We have Twister, just like Twitter, except it is peer-to-peer. People called Uber, Airbnb a peer-to-peer economy, a sharing economy, but are they really sharing economy? If you're asking like a 5-year-old, right, that if I give you a cookie, and is that sharing? The 5-year-old said yes, right? But then if you say, okay, I'll give you a cookie and you have to give me sharing. So Uber and Airbnb, they're just service aggregator. They're eating up, they're still intermediaries. But we're moving towards fully peer-to-peer with the blockchain technology because we no longer need the intermediaries. Right? Even Facebook or YouTube, you can take these traditional apps and disrupt it with the blockchain. Why is that? Well, how much of your personal information is on Facebook right now? Should we not monetize our own data? And how much is the Facebook valuation? And imagine if there's a company just exactly like Facebook, but then there's no privacy issues. How much is that going to be worth? Right, guys? So not only Western Union or banks that has to look at this technology, other industries also have to pay particular attention, anything of value, because the second wave of the internet is coming, guys. Right now, words like blockchain, decentralized, cryptocurrency are as alien to us as words like URL, internet, browser, 20 years ago to the first wave, right? But very soon, these words is going to be commonplace. So not just corporations that has to pay attention, everyone, governments, startups, entrepreneurs, regulators, everyone will have to pay attention because it is the second wave of the internet. Thank you, guys.